If you've been paying attention to crypto over the past year or so, you've probably noticed something weird. Things look great on paper. ETFs have bought billions of dollars worth of Bitcoin and ETH. The President of the United States is talking about Bitcoin reserves and even launching projects of his own, and yet crypto feels dead. There's still activity, of course there is. Chains continue to chug along, new metas come and go, and the infrastructure continues to improve from an already better than ever before level. But the vibe has gone. There's no excitement, no big dreams or bold claims about how this technology could change the world, no hope. And quite concerningly, there isn't a single clear reason for this. Instead, it's almost like everybody in the industry, every member of every group that has ever believed in this technology for whatever reason they had, have been simultaneously disappointed over the past year or so. And that collection of simultaneous disappointments has sucked the air out of the room and left crypto feeling quite dead. Let me explain. Crypto's audience has always been a curious coalition of different people, but I think you can broadly categorise them into two groups. First, there are the cypherpunks. For simplicity, I'm applying this label to everybody who primarily views crypto as a tool for disruption, and maybe even revolution. They may not all be cypherpunks in the strictest sense, but in general they want to use this technology to build a freer and fairer world than we currently occupy. And as such, they are generally opposed to the major corporations and institutions that govern our world today. They don't necessarily want to burn it all down, but they certainly don't love or trust them either. The second group are the speculators. These are the people who are interested in crypto primarily as a way of making money, not enacting change. In fact, many of them are quite nihilistic. At the end of the day, they just want to make as much money as they can, ideally in the shortest time possible. Therefore, they love the meme coins, pump and dumps and get-rich-quick schemes that the cypherpunks would look down on as wasteful distractions. Of course, there is complexity here. Some individuals don't sit cleanly into either field, but these archetypes broadly describe crypto's audience and the tension between the different factions. Now, cypherpunks and speculators aren't natural bedfellows. In many cases, they don't even like each other, but crypto has always given them a way to coexist. The speculators help to fund the projects that the cypherpunks believe in. Meanwhile, the cypherpunks give the speculators narratives that they can trade, and also that they can shield their true ambitions with. After all, it sounds much better to claim that they are participating in a revolution rather than just gambling, and it helps to draw in the crowds that they can profit off. However, the relationship between these groups has started to degrade in recent years, and things came to a head in 2025. See, traditionally, the energy and relative power of each group has swung back and forth like a pendulum. The speculators feel euphoric and empowered as prices rise. Their energy and enthusiasm can even infect some of the cypherpunks. And then, when prices fall and the bear market sets in, the cypherpunks take charge. They can use their newfound wealth to brighten the darkness and power forwards with new developments. Developments that the speculators can then get behind, starting the cycle all over again. But last year, for the first time in crypto's history, both groups were consistently and simultaneously disappointed, both by each other and by crypto as a whole. And that is where the dead feeling comes from. Wherever you looked, there was a sense of failure and disappointment, and it wasn't even possible to take comfort in the fact that the other group were doing well. Let's start with the most obvious issue. Prices have stopped going up. Bitcoin pushed through that $100,000 milestone at the end of 2024, prompting fevered speculation about where it might end up. But then it just stalled out. Since then, price action has been fairly stagnant. Bitcoin has consistently hovered between $80,000 and $120,000, seemingly spending most of its time in the lower portion of that range. And that's despite significant buy pressure from the ETFs and the steady trickle of institutional dollars that everybody expected to turbocharge prices. Worse still, gold and precious metals have had a barnstorming year. Seeing them succeed while Bitcoin flatlined was hugely disappointing, doing massive damage to Bitcoin's reputation as a digital alternative to shiny metal. And if it was underwhelming for Bitcoin, it was even worse for altcoins. The market finally capitulated on the multitude of worthless tokens that exist, largely to make insiders and VCs rich. Prices and liquidity fell across virtually every sector and every asset. Even the handful of coins that are arguably worthwhile and valuable haven't been spared, either because they are collateral damage in a collapsing market, or perhaps because they've always been overvalued in an industry that's driven by hype. Again, this served to pour cold water on one of crypto's big remaining narratives, the idea that it serves as an asymmetric bet, enabling easy money and quick wins. As a result, it was a bad year for the speculator class, and the 1010 market crash was salt in the wound. The lucky ones made it out with substantially reduced profits, and the rest suffered demoralising losses at the end of a difficult year. Crucially, for the vibes in the industry, many have even been left questioning whether it's worth keeping a large portion of their net worth in digital assets. Perhaps they'd be better off looking elsewhere, especially when we consider the second big issue that crypto is facing today. There's a deeper problem behind the disappointing price action. See, markets are forward-looking. They try to price in events that are likely to occur in the future. And the events that we call catalysts only matter if people aren't expecting them to happen well ahead of time. The bad news is that since Trump's win in November 2024, and perhaps even since the arrival of spot ETFs before then, everybody had a good idea of what would be happening in the future. Once upon a time, the ETFs were something to look forward to price in. When they happened, they were a massive deal. They're even a rip-roaring success, sucking in billions of dollars at some of the fastest rates in ETF history. But now they're just a thing that exists. The same goes for the institutional pivot to crypto. Kind remarks from the likes of Larry Fink, or big banks suggesting they would use or invest in crypto, used to make headlines and drive conversations for days. Now it's just an event that happens on a semi-regular basis. It's almost a given that major corporations would have some kind of crypto-related activity today. Then there's regulatory clarity. Maybe we've seen a bit, but the projections may actually have been over-optimistic here. Real change looks much less likely than we would have hoped for this time last year. But at least the SEC is on side and has ceased hostilities. For now. Still, that would have been priced in at the time of the election. Virtually everything we've seen in crypto of late, every piece of good news and meaningful progress, has been discussed, analysed and priced in well before they occurred in reality. And now markets, and the speculator class that drives them, are looking ahead and asking, what next? What other events could be coming up that aren't already on the radar? What do we have to look forward to? And the answer, right now, is not much. The big structural wins, the things that were supposed to change everything, like ETFs and a pro-crypto president, are here, and prices topped out on their arrival. But there is nothing else coming down the pipe to excite markets or push prices any higher. And this isn't just painful for the speculators. Just as markets are forward-looking, individuals are too. They need hope, and without clear catalysts on the horizon, even the cypherpunks feel the weight of the malaise. Next, we have the be careful what you bargained for situation, where some of those good things that were priced in turned out to be, well, not so good. The obvious one is Trump. Many crypto advocates have long dreamt that governments and policymakers would open up to crypto, to tolerate it and regulate it sensibly. They didn't necessarily want a supportive administration, just one that wasn't actively seeking to harm the industry whenever it got the chance. Therefore, Trump's embrace of crypto ahead of the 2025 election felt like a revelation. Not only would crypto finally get a fair shake from the US government and its regulatory bodies, but it would be actively encouraged. Finally, we might see positive, proactive regulations to foster certainty while protecting many of crypto's special properties. We might see a thumbs up for TradFi to get involved. We might even see a Bitcoin reserve that could solidify its status as digital gold. There was something here that all but the most extreme, most anti-institutional cypherpunks could get excited about. And it was exactly the kind of catalyst that the speculators love to trade on. It should have been a massive win for everybody. But then it wasn't. Shortly before his second inauguration, Trump decided to launch a meme coin, and then a second meme coin, this time for his wife. This was a gut punch for the cypherpunk side of the industry. The supposedly pro-crypto president was leaning into what they considered to be one of the industry's worst aspects, making the whole thing look like a joke. Even the speculators were left reeling as both coins plummeted in value, and quite predictably, insiders made off with most of the gains. Trump's venture into DeFi with World Liberty Financial has been equally questionable. At its best, this could have been an opportunity to promote some of crypto's more innovative and exciting developments. Instead, it's just another thing that critics of both Trump and crypto can point to, highlighting corruption and greed, and, once again, shining a light on some of crypto's least desirable traits. To the cypherpunks, it's clear that Trump has entered crypto on the extreme end of the speculator side of the spectrum. I think that would be demoralising on its own, but it's also led to larger problems. The blowback from Trump's antics have delayed significant new regulation that could have put the industry on a stronger footing. Now, politicians must waste time arguing about how to prevent conflict of interest and ethical issues in future presidencies. And worse still, his behaviour risks exacerbating crypto's partisan appeal, something that the industry has been working hard to overcome. There's no way of knowing how severe the repercussions of this could be in the long term. But all of these failures pale in comparison to the biggest fumble, the delivery of the strategic Bitcoin reserve. This should have been an easy win, anointing Bitcoin as a true alternative to gold and declaring it a macro asset worthy of nation states. But somehow even this went wrong. The message was confused and diluted by the creation of not just a strategic Bitcoin reserve, but a second, entirely unnecessary digital asset stockpile holding a basket of altcoins. But the bigger problem is one of optics. The second fund made the announcement look more like a corrupt kickback to donors and allies from the crypto industry, rather than a thoughtful or strategic move to safeguard something valuable. Of course, it hasn't all been bad. There have been some positives. But importantly, these are hardly the epic wins and big picture changes that people had hoped for with a crypto-friendly president. The cypherpunks especially hoped for a president who would protect privacy, decentralization, and personal freedom. They wanted someone to promote Bitcoin as a store of value that's worth holding, and to highlight the positive changes that this technology could unlock. At the very least, they wanted somebody who could put a permanent end to the regulatory hostility and ambiguity that has plagued the industry since inception, and even that looks unlikely now. Crypto isn't in a worse place than it was before Trump. I don't think anybody would claim that. But it also isn't radically better either, and that's a massive disappointment when you think about where we could have been. The ETFs are another example of wins that feel like losses. They're clearly a step forward in ease of use and accessibility. They slot beautifully into the existing financial system, so people can hold their Bitcoin, ETH, and other crypto assets right alongside the stocks and shares that they already own. And they come with the endorsement and protection of trusted financial giants like BlackRock. Except for the cypherpunks, that's the problem. Crypto, and Bitcoin in particular, was built to be yours, to be owned, held, and used by you, with no intermediaries, no custodians, and no gatekeepers of any kind. But now the largest holders of Bitcoin are almost entirely institutional custodians, or, casting an even wider net, custodians and treasury vehicle companies like MicroStrategy. So, although many cypherpunks will appreciate the way that ETFs have made crypto more mainstream and more palatable, which might help to spread its message a little further, they're likely to find them bittersweet at the very least. This victory in terms of adoption has come at the cost of crypto's fundamental nature, and it's a change that is extremely unlikely to be undone. It's easy to see why this would be dispiriting for the cypherpunks. It's easy to see why it might even turn some away from the industry entirely. The ETFs and institutions may have robbed crypto of its freedom-loving nature and rebellious character, but at least the frontier spirit can still be found amid the revolutionary ideas and bold innovations pumped out by crypto's shadowy supercoders, right? Well, no. It kind of feels like the major innovations have dried up and there's nothing new to discover. Previous crypto cycles were built around a series of newly created categories within crypto. These were obvious innovations that felt revolutionary and hinted at incredible futures. Of course, none of these things went entirely to plan. Many of the claims made about each of the categories in their early days were rather naive. The rosy futures that were envisaged are either much further away than initially hoped, or entirely unrealistic in reality. But I think everybody, deep down, kind of knew that all along, and it didn't matter. Because they gave everybody something to work towards, to imagine, to believe in. Even some of the speculators could get caught up in the fantasy. But if you look back over the past couple of years, what do we see? There's no new categories, no innovations, and nothing to dream about. It ties back to that lack of catalysts that I mentioned earlier. Instead, the biggest trend in 2024 and 2025 was hypergambling. This was primarily driven by meme coins and things like Pump.fun, but it also covers people's obsession with perps platforms like Hyperliquid, and arguably even prediction markets like Polymarket. Even short-lived trends like AI coins that purported to be innovations were little more than meme coins in disguise. That's hardly on par with the grand inventions that excited cypherpunks in previous years. It may have just about satisfied the speculators, but even for them, it feels like a lot of empty calories. Surely they would prefer a much more substantial and long-lasting trend that the masses could get behind. Ultimately, it's hard to escape the feeling that crypto has run out of new territory to explore. It seems that we've now tried everything that crypto is capable of, so all we have left is to double down on what works. And clearly, hypergambling and financialization are some of the key strengths. Now, it's worth noting they're not the only success stories, just the loudest and, sadly, perhaps the least inspiring. Now it's just about iterating on and refining all of these concepts, which isn't nearly as exciting as discovering new applications. Perhaps the best thing we can hope for is a revisiting of old ideas now that the underlying technology has improved. But again, that won't feel revolutionary or exciting, especially for the grizzled veterans who are likely jaded after having their dreams crushed long ago. At the end of the day, when so much of crypto has been built on hype and inflated ideas for so long, these small-scale developments feel boring. It feels like something special has died. Now, I've already mentioned how Bitcoin lost some of its shine thanks to gold's outperformance, but there's another grass is greener story that has affected the entire market, including altcoins. Just as crypto has started to slow, AI has exploded onto the scene with its own dramatic developments and bold promises. Now, if you want to be where the action is, if you want a shot at participating in world-changing events, you need to be involved with AI. Crypto is, at best, an afterthought. It may come up when discussing how our AI overlords will one day pay each other, but that's about it. This is another blow for some of the cypherpunks, another reason for them to abandon crypto and turn their attention elsewhere. And it's another, far more compelling opportunity for the speculators to pursue as well. It's a new bubble forming, with billions of dollars rushing in from all over the world, and plenty of potential catalysts on the horizon that could keep things moving. With AI as the hot new thing, crypto looks like yesterday's revolution. Once again, its light is fading. So here's what it all boils down to. Crypto has finally run into reality, and reality is far less exciting than the wild dreams the industry used to have. Crypto dreamt about delivering dramatic and revolutionary changes that would ensure freedom and self-sovereignty for all. The harsh reality is that it's been co-opted. It won't revolutionize anything. Instead, the institutions it sought to replace will integrate the technology to incrementally improve their existing offerings. Developments will slow, regulations will be imposed, and intermediaries will, well, intermediate. And we should have expected this. In fact, I think many, to a large extent, did expect it. They just didn't want to admit it, because no one wanted to acknowledge that this revolutionary new technology would one day become just another asset for people to use and trade. But at the end of the day, adoption requires compromise. Industries and technologies get boring as they mature, and the rate of change decreases. This is a bitter pill for the cypherpunks to swallow. Yes, they won in the sense that crypto is now legitimized and seeing genuine adoption, but it cost them almost everything that made crypto special to them. They are once again locked into the system that they wanted to escape from. Meanwhile, the speculators have lost their fast money opportunity. The clash with reality has been particularly painful and damaging for many altcoins, whose worthlessness is undeniable in the cold light of day and which may never recover. Crypto's future is likely to be a steady grind that could last for years, or even decades, much like tech stocks after the dot-com bubble. Hardly the environment for somebody who wants to get rich quick. So nobody from crypto's core group of constituents is happy. And when nobody is happy, and the excitement and energy have left the room, then the space is left feeling quite dead. Of course, crypto, and Bitcoin in particular, have been proclaimed dead time and time again. And those declarations were always wrong in the past. This time isn't too different. Crypto isn't gone. The technology clearly works, better than ever before in fact, and the infrastructure is still in place and is, as we saw earlier, still slowly improving. But this time, the proclamations are true in that the vibe has really died. That sense of possibility. The idea that we're on the frontier, building or exploring something novel and revolutionary. It's gone. and we're left with something that is less glamorous, less colourful, less exciting. But this more staid environment provides fertile ground for a new, rapidly growing and now dominant cohort in crypto's curious coalition. Let's call them the professionals. They're the kind of people who would work on stablecoins at Stripe, or at TradFi giants that are integrating crypto into their infrastructure. They're the serious, serial founders who are replacing eccentric visionaries from crypto's past. They sit somewhere between the cypherpunks and the speculators. They aren't as ideologically driven as the cypherpunks. They don't want to radically reshape the world, but they want to solve some problems and, as we've seen, incrementally improve things. And they like money. They certainly want to make some for themselves. They aren't as extreme or as extractive as some of the speculators, and they probably won't be throwing money at ludicrous coins of dubious value. Institutional money requires institutional talent, which the professionals clearly are. But they're boring relative to the pirates and the pioneers who came before them. Crypto's dead and empty feeling is the inevitable result of handing the baton off to this new group of comparatively dull participants. The future of the industry is almost certainly in their hands. Perhaps there's still a way to wrestle control back from them. Maybe we'll see a genius idea that transforms things, re-energising the cypherpunks and giving the speculators something to get behind. Or maybe we'll see the old guard fighting back. The recent resurgence of privacy coins, combined with Ethereum's cypherpunk-aligned community finally getting its act together, hints that it could be a possibility. But most likely we'll see a fragmentation. Crypto will enter a new era, one where the less extreme cypherpunks and speculators will give up their wild dreams and join the professionals in their journey, doing what little they can to maintain a semblance of the old ways. Meanwhile, those on the fringes will break away and explore new opportunities or build elsewhere. But crypto hasn't died, and it won't, even if this comes to pass. It may be tamed and transformed, it may lose many of its characteristics and ideals and excitement, but for those who choose to remain, it's very much alive. It's just something less than it used to be.